Listen to me, because this is about your money, your security, and your freedom. You have worked so hard, for so many years, to build up your retirement nest egg. You've sacrificed, you've saved, and now you're finally in the position to enjoy it. But then January rolls around, and you open your mailbox to find this, Form 1099-R. I know what happens the second you see it. Your heart sinks just a little bit, doesn't it? You start to feel that fear, that taxman anxiety. You're asking yourself, is the IRS going to take a huge chunk of what I've saved? Did I take out too much? Am I going to fill this out wrong and trigger an audit? Stop. Take a deep breath. We are not going to let a piece of paper take away your peace of mind. The biggest mistake you can make right now is ignoring this form or, worse, guessing what the boxes mean. Form 1099-R is simply a report card of the distributions you took from your retirement accounts, your 401(k)s, your IRAs, your pensions. The IRS already has a copy, so you must account for it correctly on your Form 1040. If you don't, you are asking for trouble, and we don't want trouble. We want power over our money. Let's look at this form together. Don't look at the whole thing at once, that's how you get overwhelmed. I want you to focus on the key boxes that actually matter for your security. First, look at Box 1, Gross Distribution. This is the total amount of money that left your account. But hear me, this is not necessarily what you owe taxes on. Don't panic when you see a big number there. Now, move your eyes to Box 2A, Taxable Amount. This is the number that actually matters for your tax bill. If you have a traditional IRA or a 401(k) where you never paid taxes on the money going in, Box 1 and Box 2A will likely be the same. But if you have what we call basis, money you already paid taxes on, this number should be lower. If Box 2A is blank or says taxable amount not determined, that is a red flag. It means the financial institution doesn't know your history. It is up to you to know if that money was already taxed. Do not pay taxes twice on the same dollar. That is a waste of your life's energy. And what about Box 4? That's federal income tax withheld. If you were smart and had your plan provider take out taxes before they sent you the check, that amount is listed here. Think of this as a down payment you've already made to the IRS. You need to make sure this is recorded on your tax return so you get credit for every penny you've already sent in. Now, I want you to pay very close attention to Box 7. This is the distribution code. This little box tells the IRS the reason you took the money. If you are over age 59 and a half and taking a normal distribution, you want to see code 7. That's the normal distribution code. It's the safe zone. If you see code 1 and you're under 59 and a half, you're looking at a 10% early withdrawal penalty unless you meet an exception. And if you did a direct rollover, moving money from one nest egg to another to keep it safe and growing, you should see code G. A code G means you shouldn't be taxed on that move. If you see a code that doesn't match what you actually did, you must call your provider immediately and get a corrected form. Do not just hope the IRS doesn't notice. They notice everything. Here is your actionable takeaway, and I want you to do this today. Match the form to your records, check your bank statements from last year. Does the amount in Box 1 match what actually hit your bank account plus what was withheld? If it doesn't, you have a problem that needs fixing now. Identify your basis. If you made after-tax contributions to a non-Roth account, you must use Form 8606. The 1099-R tells the story of the withdrawal, but Form 8606 protects your already taxed money from being taxed again. Verify the code in Box 7. If you are retired and over 59 and a half, ensure that code is a 7. If you moved money to a different institution, ensure it is a G. You have worked too hard for this money to let it slip away through technical errors. When you understand these boxes, you take away the fear. You replace that fear with the truth, and the truth is what gives you the freedom to enjoy your retirement. You can do this. Stay strong, stay smart, and keep your money where it belongs, with you.